Welcome to Daybreak Australia. I'm Heidi Stroud-Watts in Sydney. We're counting down to Asia's major market opens.
I'm Annabelle Droulers in Hong Kong. The top stories this hour. Elon Musk making an unannounced trip to China, meeting Premier Li Cheng and seeking to reverse the EV maker's revenue decline.
BHP is said to be looking to sweeten its bid for Anglo American after having its $39 billion offer turned down.
And Bloomberg learns that Elliott Management has built a large stake in one of Warren Buffett's favourite Japan trading houses, Sumitomo.
Well, ahead of major markets opening across for a brand new week, we are looking like a pretty positive setup so far. We're seeing Sydney futures up by about 0.3%, indicating an early advance of about 0.5% when we get to the cash open in about an hour. We did see US equity gaining on Friday. Strong earnings reports from the likes of Alphabet and Microsoft, and a relief when it comes to monthly inflation, lifting spirits at the end of what was really ultimately a pretty choppy week there. Take a look at how we're setting up when it comes to Japan. Nikkei futures are looking pretty flat at the moment. There's a real question as we continue to see the yen tumbling well past levels that have previously been touted as red lines for Japan, where that intervention is. We did see on Friday that slide just gathering pace after a dovish BOJ, and lots of questions as to the sort of the credibility of policymakers there and testing those losses in the early part of the session across major trading pairs. They put the A50 China futures looking pretty muted at this point, Belle.
Yeah, but as you said, that optimism and that strength that we're really seeing coming down to key earnings that we had out last week, the likes of Microsoft, Alphabet as well. Investors going into this earnings season, they really wanted to understand whether all of this money being poured into AI, whether that was starting to pay any sort of dividends, and the message that's coming through to investors is it is starting to pay off, at least for some firms in the market. And so that really did build into the equities backdrop, and we actually had US stocks seeing their best week for 2024. There are those concerns, of course, though, around the macroeconomic picture instead, and this week the focus very much on the Fed and perhaps, okay, no hike expected, of course, or no cut either, but what sort of messaging are we going to be seeing from Jay Powell at that conclusion of the meeting on Wednesday, and whether we get sort of any shift coming through in his tone? Oil markets to note, of course, you've got Brent crude and WTI both coming online this morning. Again, we had a weekly advance, signs of a tightening physical market coming in today, seeing it very close still to that $90 a barrel level. Heidi. But let's shift our focus a little bit to what else we're tracking this morning, and that's Elon Musk making an unannounced trip to China and seeking approval for a driver assistance software that could help arrest Tesla's revenue decline. For more, let's bring in our Chief North Asia correspondent, Stephen Engel. And Steve, you're in Beijing. You saw perhaps the plane that was carrying Elon Musk arriving, or our members of Bloomberg News did, but what do we know so far about this surprise visit?
Yeah, we are tracking the story, and Bloomberg News was tracking the plane across the Pacific, his Gulfstream, that is at least registered to Tesla. We can't confirm 1,000% that Elon Musk was actually on that particular plane, but we can see from CCTV that he was there in Beijing meeting with the Premier Li Cheng. Keep in mind, Li Cheng was the Shanghai party boss at the time that Musk and Tesla negotiated the factory for Shanghai that opened in 2019. And essentially, you know, there is a long 5-year relationship, if not more, between Musk and Li Cheng. And that is the most productive factory in the world for Tesla. But keep in mind, Tesla is having troubles right now. It just coming off its first year-over-year decline in quarterly revenue since 2020. It's also slipping down the table in EV leadership in China. So there are troubles here. They're cutting headcount globally. They're also said to be axing new recruits, college graduates here in China. They're also, you know, looking to accelerate new models around the world. However, they are not at the Beijing Auto Show, which is ongoing right now. Li Cheng did go to the auto show. There's speculation, at least in Chinese media, that Elon Musk, before he jets off out of China, might make a visit today at the Beijing Auto Show. We cannot confirm that. We are getting a report, though, coming out, actually a statement from the China Association of Automobile Manufacturers in a statement yesterday afternoon, coinciding with Musk's arrival, by the way. Coincidence, perhaps. He arrived at 2 p.m. We got the statement about the same time. The data that basically Tesla has passed the data security test on how a vehicle collects sensitive personal information and whether the vehicle allows a driver to easily stop it from collecting data. This is for the Model 3 and Model Ys from Tesla. But again, the overall pressure that Tesla is facing globally on its revenue is acute, and it is in China. I asked Bill Russo, who is the founder of Automobility. He is a long-term auto veteran in this market. He knows. And he essentially said that Tesla is losing ground in this market, and it just doesn't have the new models and is not present at the Beijing Auto Show at a time when Chinese EVs have made such grounds over the last 4 years or so.
It does have new technologies that we hear they want to try and maybe push into this market, full self-driving. Is this a sort of service, I guess, that would be accepted by regulators there?
Well, that's an interesting question. The full, assisted driving is accepted in this market. Whether Tesla's full self-driving software and system is going to be accepted is the other question. And that's probably why he is definitely here. He wants to see that revenue stream included, of course, from the world's biggest auto market here in China. Tesla charges about $8,000 to buy the system outright. They charge a $99 subscription as an alternative option for buyers. So he wants to get that approval from Beijing regulators. But there's all kinds of sensitivities around the cameras that are in the system, data security, the safety. Keep in mind, this FSD system, the full self-driving system, it doesn't make these Teslas fully autonomous. It needs driver assistance, but it's a step upwards beyond the other system that Tesla has, and that is autopilot. Autopilot has had some problems, and U.S. regulators have launched an investigation into the safety, citing 20 crashes allegedly involving that system since December, since a software upgrade since December. So again, these are obviously concerns that the Chinese regulators would have about the safety of any Tesla system, but also data security is absolutely at the crux of the differences between China and the United States. Already, Chinese regulators and authorities have essentially banned Teslas from going onto military compounds and other government facilities. So there's a long road to hoe, obviously, for Tesla. He does have the good relationships, Elon Musk, with Li Chang, obviously. But again, it's a big struggle to get that kind of approval so immediately. But again, they said all the right things. Li Chang, according to CCTV, said China is always open to foreign companies. He added that Tesla is a successful example of China-U.S. cooperation. And then Musk, also, according to CCTV, told Li that Tesla was willing to deepen cooperation with China. Keep in mind, you can kind of see Elon Musk's priorities. He was supposed to be in India last week, supposed to be meeting with Narendra Modi, the prime minister there. He wants to get into India, no doubt. There's a lot of tax issues of import taxes and the like in the Indian market. He also wants Starlink in India. But clearly, China is Elon Musk's priority. He flew in here sort of unannounced. Well, the Chinese knew he was coming. We didn't know he was coming. But he obviously sees China as a more pressing matter right now.
Our Chief North Asia correspondent Stephen Engel there in Beijing with the details on that surprise visit, really. Make sure to stick around for more insight into Musk's weekend trip to Beijing. We'll be speaking with Wedbush Securities. They're maintaining the view that the EV maker is still set to outperform despite these revenue declines. That's at 11:40 a.m. in Sydney, 9:40 a.m. if you're watching out of Hong Kong. Well, US Secretary of State Antony Blinken is due in Saudi Arabia on Monday for talks with regional counterparts on the Israel-Hamas war. It follows his meeting in Beijing with Xi Jinping, wrapping up 2 days of sometimes confrontational talks. The Chinese president warned the US not to target or oppose China, saying the two powers should be partners rather than rivals. Blinken, though, told reporters after the meeting that the US will impose further sanctions if China continues supporting Russia's war in Ukraine.
If we don't see a change. We have, in the case of the United States, we've already imposed sanctions on more than 100 Chinese entities, export controls, etc. And we're fully prepared to act, take additional measures, and I made that very clear in my meetings today.
Russia says Ukrainian drones attacked an oil refinery in the country's south over the weekend, causing a fire which partially suspended operations. The facility, capable of processing 4 million tonnes of oil a year, is among the multiple refineries targeted by Kyiv. The latest attacks follow a heavy Russian missile barrage on Ukraine, which Moscow says targeted energy, defence and railway infrastructure. We'll have more coming up when it comes to Antony Blinken's visits to China and the Middle East with geopolitical analyst Bonnie Glaser. She's joining us at 10:30 a.m. in Sydney, 8:30 in Hong Kong.
And Heidi, still ahead this hour, we'll have Japan's oldest VC firm closing in on a target to triple the value of its investment. We hear exclusively from JAFCO CEO Keisuke Miyoshi. But first, hear why Goldman Sachs expects developed market inflation to cool despite the recent hot CPI readings from the US. This is Bloomberg.
Wednesday, the Fed decides.
Jay Powell pumping the brakes on rate cuts.
Hikes are off the table. No cuts looking perhaps a little bit more likely.
You can't say there's a whole lot wrong with the U.S. economy.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Our policy rate is likely at its peak.
The threshold to cut rates is a little higher.
We're redefining patience.
Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern. Context changes everything.
Let's get you a look at the week ahead, and the Federal Reserve will hand down its latest policy decision following the release of hot inflation prints in the US. Bloomberg Economics expects Fed Chair Jerome Powell to deliver a hawkish pivot and dampen hopes for an imminent rate cut. Aside from the Fed, will also track the latest US jobs report, which could show payroll growth slowing to 200,000 this month after surging by over 300,000 in March. Here in Asia, watching China's April PMIs, they probably edge lower after surges in March. Japan will also release a slew of eco data after the BOJ kept rates unchanged last week. Of course, watching earnings as well. And on that front, we'll be looking at those results from all four Chinese mega banks this Monday. Bloomberg Intelligence sees earnings persisting there, even if those banks avoid profit declines. Other lenders, including HSBC, Standard Chartered, also releasing those results this week. And aside from the banks, we're also waiting for earnings, from the other so-called Magnificent Seven stocks. Apple, Amazon reporting after mixed results last week from their peers. Samsung's final results are also due out after preliminary numbers showed a sharp profit rebound in the first quarter. And the embattled developer China Vanke will also be reporting. It told brokerages that it's making plans to resolve liquidity pressures. And that is your week ahead.
Yeah, Heidi, really a lot for investors to be digesting over the coming days. But let's kick off with really what is one of the key events on the calendar, and that's the Fed meeting wrapping later this week, and bring in Andrew Tilton. He's Chief Asia-Pacific Economist at Goldman Sachs and joins us now this morning in studio. I'm interested in your views here, Andrew. Not really expecting, of course, any sort of move in policy, but it's really going to be that focus on the press conference to follow and the sort of tone that Jay Powell strikes as well. Do you think he's going to have to shift it a little bit?
He needs to keep the options open for the Fed after a set of upside surprises to inflation in the first quarter. We don't know for sure whether it will see inflation down to target in time for the Fed to begin cutting by mid-year. Our forecast, we think the Fed starts cutting in July. We think we'll see a lower run rate of inflation in Q2 and beyond, but that's still a forecast, not a fact.
So what do you think then is going to necessitate, or what are the sort of economic conditions that make you or Goldman Sachs sort of confident in that view that we're going to see a cut by mid-year?
Well, some of the inflation we saw in Q1 was due to the so-called January effect, a lot of annual price adjustments. Rent and so-called owner's equivalent rent have been a couple big chunks of inflation that have been running hot. But the leading indicators, the private sector leading indicators in those categories suggest inflation more like 2 to 3%. So as the existing set of leases and rental contracts converges down to that lower rate of inflation, we think we'll see the sequential rate of inflation just above 2%. Now, if the Fed's focused on sequential inflation, they may see what they like over the next few months. But on a year-over-year basis, we're still going to be above 2%, probably a little over 2.5% even late this year.
Andrew, when you listen to the likes of the Fed, when you listen even to other central banks like the RBA, there's a recurrent theme that the balance of risks is sort of so fine at the moment that it could go either way. What do you think is the major driver in terms of what we're looking at for the data in the coming months to be able to tip the scales potentially?
Well, on the central banks, it really is inflation. You mentioned the RBA, Australia. We also had an upside surprise to inflation in Q1. So in our view, that probably pushes back the onset of their rate cuts. We had originally thought they might go in August. Now we think November is more likely, given we have some more work to do to see inflation come back down to the target there. So I think for many central banks, especially the developed market central banks, it's all about the inflation outlook. For the emerging markets in the region, it's all, to a large extent, all about the Fed. Inflation's already come down to target, but they feel they want to see the Fed in easing mode before they feel comfortable cutting themselves.
And a key example of that is what we saw with the surprise out of Bank Indonesia last week, right? Are there vulnerabilities that you see within some of these emerging and more frontier aspects of Asia and the central bank policies there?
Indonesia is a great example. They have an FX stability mandate as part of the central bank's goals. The rupiah had moved above 16,000 to the dollar after the strong U.S. inflation report a couple of weeks ago. And because of that goal for FX stability, they decided they needed to raise rates. So Indonesia is probably one of the better examples or one of the more FX-focused central banks in the region. But that dynamic, waiting longer to cut, or even in the case of BI hiking, is something we'll continue to see if we don't get a relatively dovish message from the Fed over the next couple of months.
Does the BOJ need to be more FX focused, do you think? I mean, we're seeing obviously the weak yen and getting closer to 160, and also starting to perhaps really dent consumption trends.
It was quite striking on Friday. Governor Ueda didn't express a lot of concern about the yen. Yen's down maybe 15% year over year, more than 10% year to date. But he implied that that hadn't had too much of an upward effect on inflation, and that it would probably still take, the Outlook report suggested it would probably still take until 2026 for inflation to sustainably get back to target. So I think the message from the BOJ was we need to normalize policy very, very slowly. And that clearly led to a further yen sell-off on Friday to over 158. So the message from the BOJ is we're still focused on inflation. It's still going to take time to get there. And as long as the Fed and other central banks are relatively reluctant to ease, the yen is likely to be on the back foot.
Andrew, you talked about it all being down to the Fed and watching for that lead for emerging markets. Is that the bigger anchor now in a very dominant way than China? And is that sort of relationship between the EM complex and what happens in China becoming decorrelated?
Well, the Fed is still, we think, most critical in terms of how EM central banks are behaving. China growth has held up moderately so far this year. Policymakers are probably feeling reasonably confident about the overall growth target. It's still early days, but the pressure on them to ease aggressively is not extremely high at the moment. We will have a Politburo meeting this week focused on the economy. We expect that'll be more focused on the implementation of measures that have already been announced or hinted at than a big new announcement of policy easing. Now, China's growth is more export-oriented this year, so to some extent that's coming perhaps at the expense of exports in other parts of Asia. There's a competitive aspect to that, but a relatively stable renminbi to the dollar and moderate Chinese growth probably gives other central banks some optionality. So we really do think the Fed is probably the most important factor for most EM central banks in the region.
Andrew, thanks so much for your time this morning and for coming into the studio so early for us as well. That was Andrew Tilton there, Chief Asia Pacific Economist at Goldman Sachs. And you can always get a roundup of the stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers go to Daybreak Go. It's also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get news on the industries and the assets that you care about. More ahead. This is Bloomberg.
We do have some breaking news just crossing the Bloomberg on the political disarray engulfing Scotland. The Scottish First Minister, Humza Yousaf, is preparing to resign. He could stand down on Monday, according to the Times. This coming to the conclusion that his position is no longer tenable, according to reports. Senior SNP figures have been told that the Nationalist leader decided over the weekend that there is no way for him to survive this week's vote of no confidence. He may stand down on Monday. And this really comes, as we've seen, just a period of disarray and turmoil for the SNP. Conservatives lodging that vote of no confidence in the chief coming after Yousaf ended the power-sharing deal with the Greens. It's been some dramatic times and we are waiting for further developments, but that resignation could come as early as Monday. Well, BHP is said to be considering making an improved proposal for Anglo American after its $39 billion deal was rejected. Let's bring in Paul Allen for the details. So what are the next steps?
Yeah, well, important to say off the bat that there's no official comment from BHP or Anglo, so all of this information is according to sources, people familiar with the matter. But of course, it was last week BHP made this all-share offer, $39 billion for Anglo, and on Friday, Anglo rejected it, saying it's opportunistic, fails to value its prospects. So where do we go from here? According to UK takeover law, May 22 is the next date. BHP's got until then to table a fresh offer or walk away, but it's not hard to understand the appeal here. We've been talking all week about how copper prices are surging. We're knocking on the door of $10,000 a tonne. Demand could soar as well. I mean, you take an electric vehicle, needs 4 times the amount of copper as a traditional car. So BHP sees a lot of growth here, and it's much cheaper to just go out and buy an asset, obviously, than go looking for a new mine and spend billions developing it.
So, Paul, if BHP does come back to the table with a better offer, is that going to be enough, do you think, to sort of flush out some of the rival bidders?
Yeah, that's the next thing we could be watching for, because it's not beyond the realm of imagination to imagine that the likes of Rio Tinto might suddenly become interested. Or Glencore is another potential suitor for these assets. Other miners will all be thinking the same thing when it comes to copper demand. Glencore, for its part, is already doing a major deal for $9 billion of coal mines in Canada. Barrick Gold would be another potential candidate. It is, of course, a gold miner, but copper and gold deposits are usually found together, and Barrick's already expressed some interest in diversifying into copper as well. And Anglo, it's a logical target, really. It's been having a tough run. Diamond prices are down, platinum prices are down. Last December, it announced a production downgrade for its copper as well, and we saw shares falling 20% in December. Contrast that to the last 2 days of last week, where we saw shares gaining 20% on news of this potential offer.
Thanks, Paul Allen here. Well, coming up on Daybreak Australia, we're on yen intervention watch. The yen taking that tumble towards a dovish BOJ decisions. It was a monumental day for the yen on Friday, and we're watching to see how low can it go before policymakers will step in. This is Bloomberg. Take a look at how we're trading when it comes to the yen, and still on intervention watch after really kind of blowing through a number of so-called red lines that have been touted in the past as levels there where we would see policymakers step in. And this is the action as we saw the yen coming off its single worst day in a year on Friday. And in fact, looking at dollar yen, that's May 1990 lows there for the yen, also trading at similar lows for 2008 when it comes to pairs days against the euro and sterling as well. Aussie dollar and yen trading at levels that we haven't seen since April 2013. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage. And Garfield, we've talked at length about, the efficacy, the timing of yen intervention, and the fact that we've seen kind of a comfort level. Maybe has that sort of changed the lines in the sand that we previously thought were those red lines?
Yeah, I think so. As you said, partly it's because it's been such a slow grind down. And it's also, the yen is not alone in declining against the US dollar. The US economy continues to blow away all expectations that it's going to slow down. The initial readings for what second quarter GDP might end up being after that admittedly slightly weaker, though in other ways concerning, first reading, that none of that says this is an economy that needs rate cuts. And in fact, we've still got traders for the US betting on one rate cut this year for the Fed. Nobody really expects that situation to last. The market is going to go to betting on less than one rate cut that is going to send US yields higher, above 5% for the 2-year, and then others will get dragged up to those sort of levels as well. So with all that going along, it becomes really, really hard to push back against that, especially through the intervention channel. The really effective way to push back would be if you were to shift to rapid monetary tightening from the BOJ. However, there are lots of reasons why that's not something that Governor Ueda was particularly eager to countenance. So, the Japanese are just being patient, which, to be honest, is something that Japanese governments and policymakers have usually been far more patient than, say, US governments and policymakers, and that was part of what made Kuroda so exceptional. Was he came in and blew away everybody's expectations as to what a BOJ policy setup might be, to come in with those massive easings and all the rest of it. Ueda's obviously cut from a far more gradualist cloth, so that means, yes, the BOJ is on a tightening path, but it's a slow path. That makes it hard for the Ministry of Finance to come in strongly to drive the dollar-yen down, especially when everything else is busy driving the dollar up against everything else.
And Garfield, it's not just the Japanese currency, of course. The Korean won has been extremely sensitive and reflecting those differentials between the Fed and the BOK. But is the worst over, do you think, at this point in time for the won?
Well, in a lot of ways, that depends on the Fed. Perhaps you've got some level of a sort of a safeguard for most currencies, in that this month, well, this coming months, the May meeting for the Fed, the decision comes out Thursday morning Asian time. It's not a dot plot meeting. You are likely to get a signal that, yes, they're going to take at least one of the supposedly promised rate cuts off the table, but you're not going to get anything definitive about what the path for US rates is likely to be. Even with that, though, if the Fed comes out markedly hawkish, and we also have this week, the run-up into non-farm payrolls and then non-farm payrolls themselves, so the risks are skewed to the downside for pretty much every currency except the dollar, maybe the franc. The franc's proven surprisingly resilient, but the Korean won looks vulnerable from the US dollar side of things. I think it will also be key for the won. What does China do with its own currency? That has a big influence on Asian currencies. And even more important, what happens with those China PMIs that are due out tomorrow to give us a view of where the Chinese economy is going? Because even with something of a lessening of the influence of China's economy on some of the other Asian economies as the Chinese economy has struggled, that's still crucially important for economies around the region and for currencies, and Korea is a big part of that.
Yeah, and Garfield, to note as well, we've got those numbers coming out, those PMI readings from China, and the survey that we're getting through is for a modest deterioration in sentiment. But that was Garfield Reynolds there, who leads our Markets Live Asia coverage. And quick check on how futures are looking ahead of the opens here. 30 minutes out from the start of trade for Seoul and also Sydney. Japan equity markets will be shut Monday for a holiday, but we are still, of course, tracking futures and trading for the Japanese yen because we're pushing very close to that 160 mark or closer to that 160 mark and, of course, on track or on watch for any sort of intervention. But Heidi, quite a lot of positivity across the screen here today, and it does follow the US session Friday. Best week we've seen for US stocks over the course of this year. Same goes for Asia. It's that focus as well on earnings and those better numbers that came through, really sort of reassuring investors.
Yeah, a lot of reassurance that we saw going into the end of week, what had been a really choppy week, right? Obviously, a lot of event risk with the Fed this week and also more earnings, and particularly when it comes to China's big banks. And Belle, we know that this is not necessarily going to be a kind of a straightforward good news story, right? Given the effect of the property down cycle on asset quality, given some of their involvement in the sort of white project funding programs as well, which is again going to impact asset quality going forward, and lower lending rates as well. It's all about that on margins. We're looking ahead to the likes of HSBC, and the big state lenders are really the ones in focus when it comes to those themes, right? The likes of ICBC, for example. Those margin risks will be the key thing to watch in first quarter numbers. Impact on asset quality from property project, just to say, funding as well. We're looking at, quite a bit of a gain when it comes to ICBC shares, up about 10% so far this year, 13% in Shanghai. So that margin risk will be in focus and kind of setting the tone for the other big banks, fundamentally, their prospects for 2024. China Construction Bank is another one. We could see them being impacted by lower lending rates. Again, the property down cycle impacting asset quality there as well. They're also seeing a bit more of a gain of about 7%, although not as much in Hong Kong, just about 3%. Bloomberg Intelligence expects that CCB's earnings could be capped at low single digits. The other thing that I'm watching, we've talked a little bit about property, but also, of course, China Vanke, those numbers will be in focus as well. That'll be weighing on Chinese banks, particularly after the sort of vow to make plans to resolve liquidity pressure and the operational difficulties, as Vanke have called it. We're looking ahead to the details on that around $18 billion asset package to use as collateral as it seeks new lending, Belle.
Yeah, and Heidi, not just the focus on Chinese banks, on Chinese property names, also the car makers following the Beijing Auto Show, and BYD very much going to be the watch for us, controlling around 33% of the auto market in China. What's going to be really interesting to note is just how much of an impact those price cuts have been having, because we know BYD's sort of been leading a new price war of sorts on mainland in a way to try and boost their market share. The impact, of course, is going to really show up perhaps in the margins, but still first quarter revenue forecast to climb about 10% from a year earlier. So that's something we're tracking there, BYD. Really interesting unveilings, as we were noting last week at the Beijing Auto Show. But the other name to watch is Samsung over in Seoul as well. So those final results are due from Samsung, and the preliminary ones, of course, they did show us that there was a sharp profit rebound, but we are seeing better semiconductor, better readings, or better sales for its smartphone as well. So firm really expected to be one of the key beneficiaries of what has been a very solid demand coming through for AI chips. But Samsung, you can see there that jump or rise of around 16% over the course of the past year. What has not been a big beneficiary so far from the AI chip race has been Intel, and we had those numbers out last week as well, with a lackluster forecast for the second quarter. CEO Pat Gelsinger spoke to us about efforts to restore the company's dominance.
We delivered a solid Q1, right? We met on revenue. We, beat on earnings. A bit tepid in the first half, as we said, but we see a lot of, improvement as we go through the year. And with that, obviously, the foundry business, as I would say, we're going to see progress on the foundry business every quarter from now to the end of the decade. It just gets better and better as we move into our new technologies. As we've said, getting back to process leadership, which have better ASPs, and we can build better products with them. We win more external foundry customers as our scale grows. And we're also get past this period where we had to invest to catch up, right, and create the capacity for a decade plus of underinvestment. So everything there becomes a tailwind going forward, and we hit key milestones. And one of those I was very proud of. Just this week, we went to production with our first server part on Intel 3. The U.S. is back to leadership process technology being manufactured on our shores for the first time in a decade. So some key milestones, and I'll just say everything is coming together, as we would say, and we're very optimistic that, yes, in fact, we will deliver the foundry business and the manufacturing capabilities as we've laid out for the company, the industry, and the world.
Stifel, interestingly, analysts over there, 2024 should mark the bottom in many aspects, Pat. But they really want to understand the pace of the climb that is necessary. How can you tell us about how quickly you'll be able to scale back that market share that you've so far lost?
Yeah. And, we look at Intel now in these two different perspectives. Intel products, and we expose through our recast financials that we have a very solid fabless business with healthy financials, and we expect those to improve over time. But the big story has been about exposing the foundry financials and the losses associated with those. And what we see is over the decade, that will cross through profitability in the middle of the period for that business as we get back to process leadership and start to moderate the level of investment required to go rebuild that decade of underinvestment.
That's Intel CEO Pat Gelsinger there speaking to Bloomberg's Caroline Hyde. Well, still ahead, our exclusive interview with the CEO of Japan's oldest venture capital firm, JAFCO. Here's his outlook on the country's startup scene next. This is Bloomberg.
Japan's oldest venture capital firm says it's closing in on a target to triple the value of its investment in a sign of resurgence in the country's startup ecosystem. JAFCO's group CEO, Kaisuke Miyoshi, told us exclusively that they're getting a lift from a growing pipeline of potential Japanese unicorns.
There is no doubt that the number of startups that are taking on global challenges and solving very large social issues is increasing.
There's a bit of debate about how some Japanese startups want to debut too early when they're too small. In your view, what is a good size to go public, and what are some of the other important criteria for a successful IPO?
The Japanese stock market is unique in that it allows companies of all sizes to go public, from small to large. The number of startups aiming to go public, with market capitalization exceeding tens or even hundreds of billions of yen, is increasing rapidly.
It'd be great if you could share the target return for your current SV7 fund and your thinking behind how you came to this target, and whether this, in your view, is like a really good performance in the industry or an average performance, or how it is, if you could explain.
I would like to aim for a return on investment of 3 times or more. To be honest, our performance to date has been a bit lower than that. However, the reason why I think we can aim for triple is that the performance of a VC fund for startups, in particular, is determined by the number of very large startups that we can generate. I believe this is due to the fact that the number of such startups is steadily increasing. The other reason is that if we meet the standard of triple, we appear to have met certain standards for a VC fund on a global basis.
Would it be good, okay to understand that JAFCO is targeting to be one of the best, if not the best, performance in Japanese VCs?
I want to achieve good results as a top executive, and I think it's important to keep up the good performance.
So for the next step for JAFCO, for the next SV8 fund. Could you explain to us a rough strategy behind the new fund, the expected size or strategy timing, if there's anything you can share with us?
Our strategy is to create a so-called mother fund every 3 to 3.5 years on a recurring basis. From that point of view, we're thinking of launching the next SV8 fund in the second half of 2025. We haven't decided on the size yet, but we're thinking about at least a size that exceeds 7 because it's such a growing market in Japan.
If you can share maybe at least if the fund size, at least how much size that you want it to be?
The SV7 series was 97.8 billion yen, so I think the number will exceed 100 billion yen.
Among a number of issues or challenges that Japan is currently facing, what do you think is the most urgent challenge that it needs to solve?
With the government policy of asset management nation in place, changes are happening rapidly among large companies in Japan. The same applies to the startups and the transformation of the industrial structure. I think it's very important for us to properly and appropriately communicate the current changes in Japan to the rest of the world.
Would that be for attracting more interest from foreign investors, for even bigger growth in Japanese startups? Is that correct?
Japan's economy is very small compared to the US and China in terms of funds to invest in startups. However, we're about to undergo a major transformation, and I believe that the speed of growth will change very quickly. I hope that people around the world will become aware of this and invest in Japan. I would like to promote this investment not only in funds, but also in human resources with great interest.
JAFCO CEO Kosuke Miyoshi there speaking exclusively with Bloomberg's Min-Jun Lee. You can catch Japan Ahead every week. That's every Monday at 8:40 a.m. if you're watching in Tokyo, 7:40 p.m. Sunday in New York. Bloomberg subscribers can watch us live on the terminal using the TV Go function. This is Bloomberg.
The top corporate stories we're following this morning, and Apple is said to have renewed discussions with OpenAI about using its technology to power some new features on iPhones. Sources tell us that the two firms are discussing terms of a possible agreement. The latest development comes about a month and a half before Apple's Worldwide Developers Conference, where it's poised to introduce new AI software and services. Samsung and German optical component maker Zeiss Group have agreed to boost cooperation in chip manufacturing. That's following a meeting last week between the company's executives. Samsung and Zeiss say they will bolster cooperation in EUV technology and cutting-edge machines that are used in foundries and memory chip production. L'Occitane's billionaire owner Reinhold Geiger is said to be close to making an offer to take the skincare company private. Sources say Geiger is considering making an offer for shares he doesn't own at 33 to 34 Hong Kong dollars apiece. Blackstone and Goldman Sachs are reported to help fund the buyout, and the deal would value the firm at about $7 billion, including debt.
Bloomberg has learned that the activist fund manager Elliott has built a large stake in Japanese trading house Sumitomo. Japan is one of the hottest markets for activist investing, in the government and institutions are asking companies to better manage balance sheets and retool business strategies. Let's get more from our Asia equities reporter, Winnie Su. So, Winnie, what's so interesting about Sumitomo that might have attracted the attention of Elliott?
Yeah, so actually, when you compare Sumitomo with other major trading houses, you can see it really lags its peers in different ways. From also previous investments of Elliott, we know that they tend to like the low valuation and high-quality businesses, and Sumitomo's PBR and PE ratios are both the lowest among its peers, and stock price also underperforms when you look at a 5-year span. And actually, the possible reason of this underperformance partly comes down to its shareholder returns, which have been, as you know, a big trend we're seeing in Japanese companies with the push of from the Tokyo Stock Exchange. exchange. And its peers, really, the Mitsubishi Corp, announced a 500 billion yen share buyback in February, the biggest in history. And you've also got Itochu earlier this month announcing share buyback and increasing their payout ratio target. And that really gives Sumitomo more pressure to do so. And I don't think they've got a chance to do it so far this year yet.
And we have earnings as well coming up for trading houses. So what are you expecting from Sumitomo in particular on Thursday?
Yeah, it really comes at a very interesting timing, Elliott's investment and Sumitomo Sumitomo going to announce its full-year earnings and a medium-term plan on Thursday. So we can potentially expect some announcements around shareholder returns now that we know that Elliott has quote-unquote, shared its value on ways to create shareholder value, according to people we spoke to. And again, when you look at their historical investments, they tend to engage with companies before these companies put out their medium-term 3-year business plan to help the companies think about the shareholder value. And recent examples you saw, Mitsui Fudosan released its plan this month to sell assets and increase buybacks after the news in February that Elliott had stakes. And Dai Nippon Printing also announced its biggest buyback after such pressure. So there's a lot of excitement building up to see what Sumitomo has got to say this Thursday about its earnings and about what improvement plans that they have for capital efficiency.
Winnie, thanks so much for your time. That was our Asia Equities reporter, Winnie Zhu there. And these are the stocks we're going to be watching when trade opens in Korea and Australia shortly. Japan, of course, shut for a public holiday, but Tesla suppliers very much in the spotlight again. Elon Musk making an unannounced visit to China. He is on a mission to try and boost the EV makers' revenue. So there's some of the names we're tracking there, as I said, Seoul and also Sydney trading. And in Sydney, the focus on BHP, because we've got reports that the Aussie miner is considering making an improved proposal for Anglo-American, Heidi.
And of course, as we head into the market open, Belle, we're watching the yen trading very, very keenly. Of course, not just the yen, but we're seeing kind of that vulnerability across Asian FX as a result of that stronger dollar, that relentless ascent of US yields and how that's sort of playing out across Asian currencies is not likely to abate this week ahead of the Fed, seeing sort of skewing to a hawkish pivot from Jay Powell, right? That latest PCE numbers really underscoring perhaps how entrenched US inflation really is. And if you take a look at the yen, we are really kind of asking the question as to where policymakers are as these previous red lines are broken time and time again. In the next hour, market strategy with Julius Baer, the Fed's last mile in focus. Also talking about Antony Blinken's China visit and what that's achieved.